Investors in crypto have found themselves between a rock and a hard place at the moment, with a number of altcoins currently reflecting a decrease in value of around 50% of what they were just a week ago. And while cryptocurrencies have always been said to be volatile in nature, it goes without saying that nobody expected such a sudden and significant drop in value. But what do we do now about this bear market? And will it have the effect of bursting the crypto bubble once and for all? Well, whether you've been thinking of investing or just want to know how much is possible about the future of altcoins, stay right where you are, as we're about to explore everything there is to know about the bear market we are currently experiencing. So strap yourselves in and get ready to take some notes, as things are about to get interesting. But before we get into it, make sure to leave a like and subscribe with notifications on so you don't miss out on any of the new videos we post. Getting up to date with the terminology. To truly come to terms with what is going on at the moment, we need to understand the complicated jargon often used to describe the state of the crypto market. With terminology such as whale, bear, and bull being thrown around, things can be a little bit confusing at the end of the day, and this is why we thought we'd start by introducing you to all the basic overview of these terms, as only then can we talk about the bear market we are currently experiencing. A. The whales. The first term often heard in crypto circles is that of a whale, which by definition is an individual or entity that holds a large amount of digital currency. Similar to the marine mammal that these holders get their name from, they are both feared and marveled upon in equal measures, using the waves of the market to move around the cryptosphere and ensure that they are making the right decisions for themselves. This term is then further split into specific and general, with general whales having an excessive amount of various cryptos, while a specific whale prefers to a hoard of a singular form of digital currency. A Bitcoin whale, for example, would fall into the broad category of specific whales. Speaking of Bitcoin whales, the majority of these individuals or organizations take the form of anonymous traders, exchanges, and hedge funds identifiable only by their public addresses. But a number of whales have also become quite well known over the years. Satoshi Nakamoto is a great example of a Bitcoin whale who has become known as the mysterious figure behind the creation of the digital currency. Another great example would be Tyler and Cameron Winklevoss, who have been estimated to own around 1% of all Bitcoins in existence. And it doesn't take a genius to figure out that having a few whales around isn't great for the overall market of altcoins. You see, in the case of Bitcoin, we have a cryptocurrency with a decentralized blockchain, and since the market remains largely unregulated, whales have the ability to influence and move the market in their preferred direction. This is why smaller traders have a tendency to pay close attention to the whales of the industry and trade according to the platforms that they can see developing. And when it comes to the influence of whales on the market, we don't have to look any further than tech billionaire Elon Musk, who over the last couple of days has been gone from being the most beloved crypto influencer to one of the most hated men in America. By making the announcement that Tesla will be accepting payment for its products in Bitcoins, Musk was able to cause the value of Bitcoin to surge significantly, with many predicting that the volatility of the digital currency was nearing its end as a result. But then, Elon changed the market once more, stating that Tesla would no longer be accepting Bitcoin in payment due to the terrible power consumption related to the mining of the crypto. And just like that, the value of Bitcoin went on to drop significantly, which is where we find ourselves today. Keep in mind that this is not the only thing that Elon has done to change the broader market, with the billionaire also contributing towards the rise and fall of Dogecoin over the years. It does, however, serve as a stark reminder that whales will always be able to shift the market in the direction that they need it to shift in, having the effect of increasing their bottom line. B. The bears. Another reference that many within the cryptosphere use on a daily basis is the cryptocurrency bear market, which is a term used to describe the market when riddled with caution and pessimism, during which traders are more likely to sell than buy specific altcoins. During a bear market, you can expect to gain low highs and lower lows, with a good example being the Bitcoin downturn at the start of 2018. This is why many have been referring to the current cryptocurrency market as a bear market, as the significant decrease in value has set investors on edge. With such a hit to the bank account, many inexperienced investors find themselves selling off their altcoins during this period, often fearful that waiting longer to sell will will result in a larger loss at the end of the month. The bear market should not be confused with a price correction though. While a bear market is characterized by noticeable downward movements in value, a price correction takes place when the price of an overvalued commodity or currency corrects itself. In other words, we only find ourselves in a bear market when the decrease in value is considered to be consistent, as only then do investors fear what may happen by staying on the downward spiral. With that being said, many smart investors know that it's in keeping altcoins throughout this period and buying new ones for cheaper that a lot of money can be made. In fact, investors bank on this risk with the hope that the market will once more rise to the level it was before its fall. Look at what happened to Bitcoin after the fall of 2018 after all. See the bulls. Last but not least, we need to talk about the cryptocurrency bull market, which is described as the polar opposite of the cryptocurrency bear market. In other words, this is the term used to describe a market which has a trend of increasing in value, with both investor confidence and optimism being on the rise during this time as well. It goes without saying that in securing yourself a position within a specific crypto during a bear market, you set yourself up to become a millionaire when the crypto lands itself in a bull market. But since it's often the whales who dictate which way the markets trend, it's not exactly fair to the little investors like us who can't afford to hold a significant share compared to the total market cap of the crypto in question. The current bear market. You will have noticed that even the terminology used to speak about crypto shows just how volatile the market can be. And although altcoins were first brought to give users access to a decentralized currency that would lead to easier cross-border purchases, what we have now more than ever is an investment scheme riddled with risks. In order to make a living by playing the cryptocurrency exchange, you have to get in and get out at the right time, selling when the price is an all-time high and buying when a crypto is valued at an all-time low. But since there are so many variables that could bring about these changes, along with the influence that whales have on the market, it is a massive risk at the end of the day. Just look at investors who are currently left with thousands of altcoins in their possessions, and you'll see what we mean. After reaching a high of almost $60,000 per coin, Bitcoin fell to around $30,000, with a number of other cryptos such as Ether and Dogecoin following suit. There's no doubt about it, we are currently in a cryptocurrency bear market, and we have to act accordingly. Expert opinions. It must be said that experts have been warning the public about the bursting of the crypto bubble for quite some time now, with many investors dismissing them due to the fact that their advice was often based with the financial sector. As such, the opinions of a great number of experts were dismissed as being the result of analyzing with financial blinders on. But if investors had only listened, they would have seen that a cryptocurrency bear market was definitely in sight. So let's look at what these experts have said about crypto and see whether anything can be done to beat the negativity of the bear market we are currently experiencing. Many experts have referred to the crypto exchange as nothing more than a pyramid scheme that leads to whales getting richer and smaller investors only succeeding based on luck. The reason why many within the financial sector refer to it as a pyramid scheme is quite simple. Those who purchase into a crypto during the bear market when the value is at an all-time low will make the most money when the market starts to rise again, and a crypto will only increase in value when more people begin to buy into that crypto once more. The more that buy into the crypto, the greater its worth. This enables a whale such as Elon Musk to buy as much crypto as possible right now for next to nothing, allowing him to capitalize on this investment by announcing that Tesla will once more accept payment in Bitcoin, leading to more people buying into the altcoin. And as the value of Bitcoin increases once more, so does the bank account of Mr. Elon Musk. But what do you think about the state of the crypto market at the moment? Feel free to let us know in the comment section down below.